What's up, YouTube? In this video, I want to use my many years of experience as a CPA to help business owners identify their core accounting and finance needs as their business grows. Now, a CFO is not responsible for generating revenue in a business, but they are responsible for how that money and the cash is managed. Just like in personal finance, no amount of income can save poor money management. If you've watched some of my other personal finance videos, you probably can tell that that's something that I talk about a lot. Likewise, in business, no sales and marketing technique can save poor money management as well. So let's talk about some of the different goals that you might have as a business owner and how accounting and finance relates to these goals. For example, if you're presenting your business to a potential buyer, the buyer will be turned off if your records are a mess, because the bookkeeping and the records of your business are basically the proof that your business is what you say it is. If your goal is to scale your business, scaling requires either a reinvestment of profits or external funding. In either case, if you cannot generate the right financial data or KPIs, it leads to suboptimal decision making. If your dream is to take your company public, which I know a lot of business owners dream about that, there are a lot of legal and regulatory requirements around going public. In Canada and in the US, a business cannot go public without audited financial statements. And if you go to an audit firm, they're going to require you to have documented processes, accrual-based financials, and have everything in order before they will sign off on your audit before you can go public. If you need bank funding, imagine if you went to the bank for a mortgage approval personally. Your mortgage broker is going to run a credit check on you. They're going to ask for your tax returns. They're going to ask for proof of income. It's the same thing when it comes to a business. If you need funding, the bank needs reassurance that you can actually pay back the loan, because that is risk on their end to extend the money to you. And how you show them that as a business owner is by having your finances in order. Now, in my career, I worked with hundreds and hundreds of small, medium, large businesses, privately held, publicly traded. And for most business owners and executives, this stuff tends to always be an afterthought. I completely understand this as a business owner myself. I'm personally not thinking about my own bookkeeping or finances necessarily on a day-to-day basis. So there are so many different types of businesses out there. So what I'm about to say applies to businesses in North America that are privately held, service-based or SaaS, hold no inventory, do no manufacturing, or do not have any complex accounting needs or reporting requirements. You might be wondering, that's a really narrow and specific set of criteria. Well, actually, these types of businesses account for 77% of GDP in North America. So it's not a small number by any means. There are so many benefits to service-based businesses, but the margins are high. There is generally no significant startup costs, and the barriers to entry tend to be lower than that of something that requires a lot of inventory or manufacturing. So this is going to apply to a photography business, a professional services businesses like a law firm, a dental practice, a marketing agency, an HR agency. This will also apply to SaaS as well, because for most SaaS businesses, the biggest expense is payroll, and they scale with people because their actual product is technology. So if your business is doing below $500,000 in revenue, usually at this stage, the owner is doing the bookkeeping themselves for the most part. So any user-friendly cloud-based accounting software such as Xero or QuickBooks Online, the goal for the accounting software is just something that allows you to input expenses and track invoices. If you're going to outsource any sort of accounting at this stage, what you want to look for is a bookkeeper, and you don't need to have one that's designated. You're looking for somebody that can help you input expenses and track invoices and keep things organized, basically. The biggest tip that I would have for business owners in this stage is to keep business expenses and personal expenses and money separate. So whether you do this accounting yourself or you are giving things to a bookkeeper, it will be much easier for both of you if you are keeping your finances separate. Another tip is you want to minimize the number of credit cards and bank accounts that you're using for business. If you have 4 different credit cards and 5 different bank accounts and you don't actually need all of those accounts, it ends up creating so much more work and complexity for yourself. Below $500,000 in revenue, I encourage you to keep things as simple as possible. You may feel like you don't have time to do things like scan receipts, attach PDFs, and spend hours inside an accounting software. So try to create efficiencies where possible, keep it as simple as possible, and I recommend going cloud-based. If you make any in-person purchases, like let's say you go to Staples and you buy some printer paper or you buy some sort of office supplies, Get into a habit of taking photos of your receipts as soon as you buy the thing. If you have an iPhone, as soon as you take that photo, it's going to be uploaded to all of your devices. Then when it comes to your year end, what you want to do is you want to look for a CPA to do your corporate tax return and file your sales taxes if that's relevant for you. If you're really just starting out and your sales taxes and your corporate taxes are pretty simple, you can actually do it yourself. And if you're a Canadian business owner, check out my video up top here on how to file your T2 tax return. Anything up to that level of complexity can be learned and done yourself. The main goal at this stage, below $500,000 of revenue, is just to have a system to stay organized and stay on top of your expenses, to know your margins, your gross margin in particular, which is the most important metric when you're starting out. If you're not profitable yet, then know what your monthly burn rate is, and to develop any internal KPIs for your business so you can benchmark your performance. At this stage, I would say keep it simple. You only need annual financial statements. Now, the next stage is between $500,000 to $2 million in revenue. At this stage, you're probably going to be way too busy to do these things yourself. So I recommend looking for a part-time bookkeeper or an accountant, someone that can either charge you hourly or monthly. And the main thing that they're doing is entering expenses and coding them properly. They should also know how to do invoicing. They should know the basics of AP and AR if that's relevant to your business, if you have payment terms from vendors or to your customers. Alternatively, you can look for a fractional controller, and usually between 500 to 2 million revenue, it's going to be a smaller package. Fractional controllers usually have different size packages based on the size of your business and how many transactions you have. The main financial problems at the 500K to 2 million mark are being able to create some standardized financial processes for your bookkeeper or accountant. Cash flow forecasting. So if there is a time gap between when you invoice clients and you receive cash, that is something you want to be reasonably able to predict and monitor at this stage. Especially important because at this stage of business, you will probably have full-time employees on payroll. And when you have full-time employees on payroll, the most important thing as a business owner is being able to pay those employees so your business can continue to run. So a good goal to strive for at this stage is to be able to make business decisions based on financial data, and ideally being able to generate live data, meaning that at any moment in time, you can go in and look at your numbers and it's accurate to date. And you're still going to need to hire an external firm for your year-end and corporate taxes at this stage. On top of that, I think it's a good goal to be setting up SOPs and financial processes for billing, collections, payroll, and document them if you can. At this stage, I think it would be great if you could produce proper quarterly financial statements. It's not necessary to produce quarterly statements at this stage, but I think it's a good goal to go for. The next stage is between 2 to 5 million in revenue. Now, at this point, you're going to probably need an in-house accountant, so a full-time employee that's either at a senior accountant or an accounting manager level with a couple years of experience under their belt. And ideally, this is somebody that can work autonomously. When I mean work autonomously, I mean that it's an employee that generally knows what they need to do. And at this stage, a bookkeeper is not going to cut it anymore. You need an actual accountant that knows how to prepare accrual-based financial statements if you're not already making them. The reason why you need an accountant over a bookkeeper is because you want to have someone who knows how to close a month end, who knows how to oversee basic processes in reconciling accounts, AP, AR. If you don't want to have someone in-house, you can still rely on a fractional CFO that offers bookkeeping and strategic work as needed. There are actually a lot of benefits of going to a fractional CFO. One of the main things is that they have economies of scale, meaning that you get someone more experienced at a slightly cheaper price. If you're looking for a fractional CFO, they should allow you to pay for what you need based on the different prices of their packages. You're still going to need an external firm for your year-end and your corporate taxes. Some fractional CFOs may or may not offer this service depending on their business. Some businesses at this stage may feel like they're starting to outgrow their current accounting software, but the general need at this stage is more customized internal and external reporting to meet their operational needs and be able to produce financial statements regularly. I would say the biggest goal at this stage is be able to produce the right data for decision making on a regular basis, and ideally accrual-based financial statements if you're not making them already. Now, somewhere between the 2 to 5 million mark, probably closer to 5 million if the business model is simpler. It also depends on profitability as well, but at some point you're going to need to bring in an in-house CFO or an experienced controller that understands the operations of your business very well. And the main thing that this controller or CFO should be focused on are things like treasury management, right? So being able to manage cash flow. So for example, if a business collects money from their customers in US dollars, but they pay their employees in Canadian dollars, then the CFO or the controller needs to be aware of the foreign exchange rates and know when to convert cash regularly so they can maximize and not lose out on foreign exchange. CFO or controller at this stage also needs to be experienced enough to understand how to allocate capital based on operational needs and strategic goals. So for example, for a service-based business or SaaS business, the biggest operational spend is usually payroll. So capital allocation in that regard is headcount planning. How many people do we expect to have on our payroll in a year from now, 2 years from now, 3 years from now? Do we have enough cash to meet that demand? It could also be implementing new software for the business, how much that's going to cost to implement upfront, how many people or resources the business is going to need at that stage to be able to use that software. Funding. So at this stage of your business, if you feel like funding is what you need to grow your business to the next level, whether it's through debt or through equity, then you're going to want to look for a CFO that has some experience in this area. Now, funding isn't specific to companies at the $5 million mark. You could have a business at $1 million and need funding to get to the next level. But the point is that usually to be able to get any sort of bank funding or equity funding, you need an experienced finance professional, ideally at a CFO level that will be able to represent your company. At the 5 million stage though, you definitely need somebody who is able to run and manage financial operations, both in FP&A and in accounting. So FP&A is forward-looking, it's forecasting and budgeting, and accounting is backwards-looking, meaning that it's recording historical transactions and producing financial data. And so having an industry-specific CFO or an experienced controller in-house that can set up processes for both historical financial data and also forward-looking projections is pretty critical at this stage. The main goal at the 5 million mark, I would say, is for a business to be able to produce regular monthly financials within a reasonable time frame. The industry standard for monthly financials is 15 days. If it were up to me, the question I would ask is how can we close these books as quickly as possible without having to hire additional finance staff? By this point of a business, they should have finance processes, be able to do some sort of budgeting and forecasting, and also be able to produce both external and internal reports as needed. Now, by the time a company hits 10 million in revenue, finance will now be a team. At 10 million for a service-based business, probably 2 or 3 people, at least 1 CPA and 2 staff, or 2 CPAs and 1 staff, depending on the complexity of the business. When it comes to goals at this level, I would say pretty much all of the above that I've said. Being able to produce monthly financial statements by the 15th of the month without having to hire additional staff, having processes for both budgeting and forecasting, so FP&A, but also accounting and close. Usually around the 10 million stage, this is when a company is going to probably need an ERP. An ERP is basically just a fancier accounting software that allows you to do more and allows you to customize. And by doing so, if it's done properly, it prevents the business from needing to scale its finance team with more people. Beyond 10 million in revenue, one of the biggest pain points that a business can have when it comes to its finance team is that everyone is still doing things manually in Excel. Past this point, the more manual your processes are, the more manual your bookkeeping is, the more that you're going to have to scale your accounting team with full-time employees. And if you keep growing the business this way, it will actually eat into your profits and may lead to overworking your accounting staff, causing turnover. I know business owners tend to be very operationally and revenue focused, and in my experience, I've never really met one that's willing to scale finance with more people at this point, especially if the business is not already profitable. So the biggest goal at this stage is trying to get out of spreadsheets, creating automations where possible, having very solid finance processes, and potentially look on getting into an ERP. And an ERP takes anywhere from 12 to 24 months to implement. I've been a part of a couple of ERP implementations myself, and it always takes longer than people think. But by this point, the goal is definitely to be able to produce regular monthly financial statements, regular reporting, and seeing whether the business can leverage more technology at this stage rather than having to hire more people for its finance team. By the way, guys, I've never made a video like this before. If you guys want to see more of this type of content in the future, then please let me know. If you like this video today, you're definitely going to like my video where I talk about the top financial habits that people in the 1% have. As a business owner and an entrepreneur, I'm sure that's probably one of your goals in life, to be able to make that top 1% money. If you guys have any questions about accounting or finance, let me know down in the comments below, and I'll see you guys in the next video.